In this video, I'm going to be answering user questions. But first, I want to say thank you so much to you, my viewers, for helping me achieve almost 1 million views here on YouTube. I really appreciate it, and I couldn't do it without you. So thank you very much for that. In this video, I'm going to answer questions that I've gotten on my channel in the comments section. So if you have a question, make sure you leave it in the comments section and I'll try to make a video on it. Now, the very first question comes from Life with Margot, and her question is, where would I start a blog? Do you earn money with your blog? The answer to that question is yes, I do earn money with a website. I actually have I have 4 websites, 3 which make money now in one way. No, I have 5 websites, 3 of which make money in one way or another now. You may have seen my other video where I talk about a website that I purchased as an investment about 1.5 years ago because it was selling at an earnings multiple of 3. That's been a very learning experience for me. If you're interested in learning more about that and how I did that and how it panned out, please leave in the comments section that you're interested. I like to make videos that I know you all want to hear about and talk about things that interest you in the world of investing and finance and retirement. So yes, you can make money with a blog. We make money from blogs. My husband and I have websites, one together, and you can make money in a lot of different ways. I mean, one of the most popular ways and easiest ways, and one way that I make money, is from advertising revenue on my website. You can also make money from coaching. I offer private coaching, financial coaching services on retirecertain.com, and I'm frequently hired as a financial coach and do that ongoing. And I also have courses on my website that teach people how to save enough money to retire, as well as consulting about more advanced investing strategies using Allocate Smartly and that type of thing. So that's another way you can make money with a website. Another way you can make money with a website is from affiliate, being paid for recommending products. A lot of people do this with just tons of products. I don't recommend products unless I use them. I personally bought them and or am paying for them, or I've used them. Hence, I really am only an affiliate for one financial product. Actually, that's not true. I've got 2 financial products that I'm an affiliate for, as well as a website or a course that teaches about how to start a blog. So I do have 3, but most financial publishers like myself, channels, have tons of affiliate products, so I'm just very selective about that. I do have an Amazon store that I receive very, very small commissions for when someone purchases, and I'll put a link to that below. I have on there my favorite investing books, as well as products that I've bought over the years. I think I'm a pretty smart shopper, and so I like to share my purchases, and so I make a tiny bit of money on that as well. I do give away a pretty good portion of the affiliate commission that I earn. I just feel like it's my way of giving back, and I enjoy being able to do that. So yes, you can make money with a blog a lot of different ways. We've also developed financial software. My husband has mostly done that. My sort of end of that is finding the coder and that type of thing. So we've done it as a team, but we also sell financial indicators and software. So that is another way to make money. So there's just so many different ways. A lot of people have lead generation websites and other ways that they make money, but I've addressed our most common ways that we make money on our websites. So yes, you can absolutely do that. Okay, the next question comes from Charlene Chin, 8714, and her question is, what is an ETF rotation strategy? Now, I'm just seeing that she typed ETF rotation strategy, but I think she meant an ETF rotation strategy, and that is a strategy that I use for investing. And what it is it invests in asset classes using ETFs. So instead of index funds, I use ETFs. I like it because they are bought and sold just like stocks are, and I can just go into my brokerage account, and for zero commission I can just buy and or sell the ETFs. And just like an index fund would do, it represents an asset class. So I have an ETF that represents, or several ETFs that I buy and sell that represent stocks, international and U.S. stocks, as well as bonds, as well as real estate, gold, commodities, and other ETFs that I invest in. So rather than, the key word here though is rotation, I no longer use a buy and hold portfolio strategy. I've learned after 4 decades of investing in both bull and bear markets that sometimes certain asset classes do good during certain economic environments, and other asset classes do good during certain economic environments, and the same is true for doing bad during certain economic environments and certain time frames. So I don't buy and hold a fixed asset allocation, a fixed portfolio. I don't do that anymore. Instead, I rotate based on what is more probable to go up in price, rather than just doing the whole thing where you buy and hold through a bear market. I don't like doing that. I learned the 2020s bear markets have not been bad. Some argue that they were even real bear markets. They were so short. And a lot of that was due to Federal Reserve intervention in the financial markets, which increased the liquidity, and it quickly put an end to those bear markets, and they weren't very bad. But in the 2000s decade, we had really, really bad bear markets. The NASDAQ went down over 70, some studies say 72%, others say 78%, anywhere, somewhere in the 70s. Percent-ish. It takes a long time to recover from that. I believe it was over 15 years before the NASDAQ got back to break even. And the S&P 500 fell about 55% in the bear market during the Great Financial Crisis. So those are the types of bear markets I like to try to avoid. And with an ETF rotation strategy, I rotate out of stocks as they go down. Timing isn't perfect, no, but I'd rather do that than buy and hold. And I make my decision about which strategy to use based on decades of historical data that has been achieved through back testing. So that is what an ETF rotation strategy is. I'm trying to keep it not too complicated, but that's my answer to that question. The next comment or question comes from Jane Nelson. It's really more of a comment, I would say. Jane Nelson 8304, and she says, how much does a financial advisor cost? I believe that may have been the title of my video. I'm not sure about that, but according to financial guru Michael Keats, because they buy most purchases at zero cost and keep you from making dumb mistakes, 1% really costs 0.33%. In 2022, the market was down 20%, some ETFs 30%, and that's the kind of really quick and easy bear market I was referring to, not the bad bear markets that we've experienced in other decades. And she said my low was down 7%, critical when in retirement. I think, at least in my case, a financial advisor is worth it, and I'm glad that she feels that way and she has had success with that. Doesn't mean I don't pay attention though, and that's great. So one of my main points are that even if you have a financial advisor, you really, really need to understand investing, because if you don't understand investing, how in the world are you going to hire a good financial advisor? How are you going to monitor them? How are you going to evaluate whether or not they're doing a good job for you? You can't. So it's often said, oh, well, I just use a financial advisor and they handle all that. I'm sorry. I think you need to understand investing in order to evaluate the person that is doing one of the most important jobs that you'll ever delegate, if not the most important job you'll ever delegate. And my comment, though, back to Jane, was that is such a good point. I always suggest that everyone do what will give them the best results. And why I have an entire module in my course on my website, How to Retire When You Want and Maintain Your Desired Lifestyle. And I have an entire module on evaluating and hiring financial advisors, because I find that some of my financial coaching clients really want to work with a financial advisor, and there's nothing wrong with that. In fact, I absolutely agree that can be the better route. A lot of investors can be their own worst enemy and buy high and sell low for various reasons. And a financial advisor can help you avoid doing this. I said the truth is a lot of investors will do better with a well-chosen financial advisor. Of course, Michael Keats, who she was quoting in there, is a financial advisor. So it's kind of unlikely he would suggest not using a financial advisor. And his information is going to be, a little bit biased because he is a financial advisor. I'm not a financial advisor. I'm an investor and I'm a financial coach. So I don't manage wealth for other people, and I don't. I approach this from an unbiased perspective as a result. So I do pay 0 commissions also for my own portfolio, which is very common today. Anyone can do that. As I mentioned, I do that with my ETF Rotation Strategy, or maybe I didn't say I do it for free, but I do. And as always, I appreciate the comment, and I absolutely love that you're paying attention to your portfolio, Jane.